right, so let's wrap up. Drum roll, my predictions for the year ahead. The goal of forecasting is not to predict the future, but to tell you what you need to know to take meaningful action in the present. So what are my predictions? The U.S. economy will be in recession for most of 2023. There could be a quarter of positive growth during the year because consumers still balance sheets pretty good, but the U.S. will largely be in contraction. Unemployment rate, it will rise and reach at least 5% by the end of the year. Job losses will impact white-collar workers more than blue-collar workers. We have a shortage of skilled labor, folks. We have a lot of people that have white-collar skills, and technology industry is going to get hit. Interest rates. After the rate move of yesterday, the Fed will move short-term rates by another 50 to 100 basis points, and then probably pause. Could be 125 basis points, sure, but I think we're going to pause out somewhere in the 75, 100 basis points further rate move. I think they'll do probably 50 at their next meeting, and then wait to see and maybe do another 25 and then slow down, because I think the inflation data will start, has already crested in a lot of areas. And again, as long as they keep up their balance sheet shrinkage. Once a crisis occurs and they break something, the Fed will start to cut rates, but it's too hard to determine the size of the rate cuts, which will depend on the severity of the crisis. That's just too unpredictable. The Fed's balance sheet, the Fed will have to halt quantitative tightening in the first half of the year due to dollar liquidity pressures both domestically and globally. Dollars are becoming harder to get by around the globe, and we'll have problems in our funding markets around the globe. So I think they're going to have to stop, my guess, sometime March, April, May, in that time frame, quantitative tightening. Predictions, Europe, it will fall into a severe recession with the risk of one of the pigs, Portugal, Italy, Greece, Spain, having a full-blown funding crisis. The ECB has a big chore on their hand how to keep those countries alive as funding costs are rising, given their debt levels. China, when it rescinds their lockdown, it will cause a temporary economic boom in the Chinese economy, but also an inflationary spike, which will send global oil prices higher. One reason why oil prices aren't as high because China is using a lot less oil. And in fact, it's probably my biggest reason why I think they are doing these lockdowns. It has nothing to do with COVID. It's they know they will have a massive inflation problem and oil prices will skyrocket. They import a lot more oil than us. China could start the whole globe into severe turmoil if it invades Taiwan. And I hate to say it, my odds are 50-50 on that. Man, I hope it's nowhere close to that. U.S. equity markets. Major industries will contract by at least another 20%. Over the next 6 months due to downward earnings revisions and liquidity being drained from the markets. There will be at least a few bear market rallies during the year, and if or when the Fed pivots, there could be a larger rally that bring the markets back to where we are today. So I think we're going this, and if there's a big pivot, then I think you could have a big rally that sends us back. How long that rally lasts and how long it stays up, we'll talk about next year. U.S. housing prices will fall 10% in 2022, will decline by another 10 to 15% in 23. Transaction volumes will stay depressed because many homeowners will be locked into their homes due to low fixed rate mortgages. Commercial real estate. Cap rates will continue to rise through 2023. CRE property values will fall by 15 to 30% depending on the property sector and geography. Different sectors will have bigger hits. You've already seen the dispersion between industrial, multifamily, office, retail. Interesting enough, retail has been very resilient. It's been looking good. Fixed income, corporate credit spreads, particularly high yield, will blow out as a result of defaults and credit losses materialize. The CMBS market and the CLO market will seize up at some point.